CPI and PPI. Hello and happy Thursday. Thank you so much for pressing play and paying attention to what I have to say. And I don't have much to say today. It'll be pretty quick. I want to talk about CPI and then PPI. CPI came out yesterday and we might as well just go to it now. So far, so good. It looks like we're heading in the right direction. I don't know if you guys if you guys have heard the news. I'm sure you probably have, but right here, that number 3%, that's how high inflation went up, and that's on a 12-month average, like we guys always talk about. Right here, it only went up 0.2% based off of month over month. Now, those are great. That's great news. The problem with that, though, is, first of all, that's exactly what we want to see. That we need to see those numbers going down. Remember, that number was in the 9s in June of last year, right? 12 months ago. So we're happy that these numbers are going down, but what we're not happy is this 3% right here. This is going based off of 3% higher than it was last June. Okay, so still taking into account that last June was at 9%, and this year, 12 months later, it's 3% higher than it was last year. But we have to be happy about that because we could tell that economic growth is slowing. Now, with that being said, producer price index came out this morning. And to me, this is more important, okay? This is more important because producer price index, when you're looking at that, you're looking at before it hits the consumer. Okay, so CPI is inflation to the consumer. PPI is basically inflation to the person producing the product. So did the price of the car that you built, did all those parts go up? Did all that labor go up? That's a very good leading indicator on inflation. Now, what the main question at the end of that is, if those prices did go up, did you pass it on to the consumer for CPI? All right. So now going to PPI, this is really good. It only went up by 0.1%. Awesome. As a matter of fact, last month, you guys can see already a little bit lower, 0.4%, but it's right on track to what everybody's thinking is going to happen. Everybody thinks that we're going to come in with low numbers. We came in with low numbers. Actually, we beat expectations, so that's a good thing. Now, moving forward, what's going on for the Fed? Last month, I said after the meeting, I said I think we're going to do one more rate hike at minimum. And a lot of people said at the time that they thought that we might be done with rate hikes for the year. And I said if I was me and I was the Fed, I would do one more just to really sum it up. Now, apparently, there's like a 90% chance that the Fed's going to raise it one more time. So I got lucky there, right? It's a 50-50 shot. But I was going to try and explain to you my thoughts about what I think the Fed's going to do, but then I watched this video, I cut it up a little bit, and this is a lot better version of what I was going to say. So let's just go ahead and do that.
Inflation cooling substantially in June, up just 3% from the previous year, the smallest gain since March of 2021. But it may not be enough to stop the Fed rate hikes. Welcome to both of you. Before we talk Tara versus Tina, Peter, what should the Fed be thinking about this inflation report and about those who say, well, is a 3% going to be the low print of the next 6 months that we get?
Well, to your point, it will be just from a comparison base effect standpoint. And I don't think the Fed is going to be totally surprised by this inflation, for instance. It was only modestly below expectations. And prior to this, they seem to be very committed to raising interest rates again. I think the point that the Fed is trying to basically tell the market here is that if we back off, and this is what basically Tom Barkin said today, if we back off, inflation comes back strong, then we're going to be required to do even more. And I think that's their sort of foot on the neck of inflation that's going to remain there, even though they're not necessarily going to be pressing down much further.
That's a great explanation. I mean, great explanation. And he's going into, even though they're not going to try and do much more, we're not going to let off.
After just one rate hike. It's interesting, the Fed funds futures did not really blink an eye after the CPI print.
Because it was sort of in line with what we knew was going to happen. But Peter, I want to focus on that for a second. The idea that if they take their foot, off of these hikes and, inflation's going to come back. Well, why? There's signs that the labor market's cooling. Does anyone expect it to reaccelerate?
Well, not necessarily, but they're afraid that there's still that possibility. It's just the 1970s playbook that they don't want to revisit. And that if they do back off, if they do start to cut interest rates, for example, in response to a rise in the unemployment rate, well, what happens if that does flare up inflation again, and then they're really stuck? I mean, just even now, even today, you have oil prices that are quietly at the highest level since late April, coinciding with the weakness in the dollar. So the Fed needs to be stubborn with their persistence on keeping higher rates for longer. Now, I don't agree that they should hike again, but I think keeping rates higher for longer will be its own form of tightening.
All right. So I do think they should hike again, just one more time, which apparently everyone is saying that they are. And from there, hold and see what happens from there. And I would hold for 2 or 3 months. Let the market calm down. Let the market get adjusted to the new rate. With that being said, to wrap things up here, I'm interested to know what's going to happen. Right here, you got inflation right now, right? At 3%. Look at this, guys. Core inflation is higher than actual inflation. Core inflation is pretty much CPI, but you back out food and energy because food and energy is volatile. So the question remains, is core going to be going up or down? We're not going to find out core until the end of this month. The last day of the month is when they report. But I'm very interested to see what's going on there. Very interested to see what the Fed's going to do at their next meeting. And I'm very interested to see how we're going to end the rest of the year. Maybe that soft landing that Powell been talking about, maybe it's here. All right. Thank you very much for listening. Hopefully that was at least a little bit informative. And please remember, life is not meant to be. It's meant to create. Too strong. Hey, and don't knock me for my Cardinals. I know.